multiple indicators, the MACD and the RSI being, the ones that are the most popular. Now, what is convergence and divergence? Well, in essence, convergence is where the indicator is basically in agreement with what is happening with price. Divergence is where the indicator is in disagreement with what is happening with price. So in other words, in simple terms, and we're going to go through an example, but in simple terms, essentially is if the market is going up like this, in other words, making higher highs and higher lows, but let's say you look at the indicator and it's doing the opposite, in other words, it's making lower highs like that, that would be classed as divergence. And then the opposite of that is if it's making higher highs, then, in line with the price, then that would be classed as convergence. And essentially, that means that, the likelihood is that the trend is going to continue, and this means that the likelihood is that the trend is not going to continue. Okay. Hopefully that makes sense to everybody. So, moving on, what we're going to do is we want to have a little look at the charts, okay? Because then you can look at some examples, and we'll start with looking at the S&P 500, and we'll use the RSI in this case to identify convergence and divergence. Let's have a little look. So here we are. You can see that here we have the price, which is going up. Okay, you can see the market is basically making higher highs and higher lows. And you can also see here that the RSI is also going up. In other words, this is converging with price. So it means that at the moment it's in agreement with price, which means, that the market may continue to go higher. And then in this example here, where the market is going higher, here you can see that the market is diverging. In other words, it's doing the opposite of price, and actually then the market is more likely to go down, and you can see that's exactly what happened. And in these type of examples, because something can be converging or diverging for a long time, what I would suggest is that you use other tools to help you enter trades. So for example, one of the things you could have done is potentially drawn your up trend line. I don't think I'm going to be able to do this freehand, but I'll try and do the best I can just to show you. So you could have said, hey, do you know what? We've got some divergence. Once this trend line breaks, then I can be looking to kind of sell around there. Okay, so that's the type of thing that you can do, combining different tools and different price action related things. Okay, now finally we are going to cover pivot points, and we're also going to discuss Fibonacci and how these work together. So pivot points are a great tool, and actually, I'm not sure if you know how pivot points actually started off, but they actually started and were created for people that used to trade in the pits. So before we traded on computers, like we kind of take for granted now, I don't know if you've watched those movies where people are shouting all sorts of things in the pits. Well, this was how they calculated support and resistance, so that they can identify levels where the markets might hold a support and resistance, and that's how it began. But it's now used even now, and actually it's a very, very nice tool. And what it does, it shows you essentially where there is hidden support and resistance, and you can again use this as a confluence. But also what I like to do is, because you have different levels, so it's like you have the pivot point R1, R2, R3, R4, and then S1, S2, S3, S4, and so on. I like to see where we are, because the higher the number, the further extended something is, or overbought or oversold. So that's also quite useful. Now, again, this is just a tool and should only be used as something, to improve the probability. There's no such thing as any kind of tool that's going to give you all of the answers. So let's have a little look at an example. And in this example here, you can see that all of the pivots have been added. Now, personally, I don't like to have all of these on my chart, so I actually change the settings and make only the current one available. Okay, and here you can see, for example, this is the pivot point, and these here basically become support and resistance areas. Okay, and so so for example, here this is a like on this chart here, this is the first resistance point, the second one, the third one, and so on. And this is the first support point, second, third, fourth, and so on. Now, the only reason why you might want to have all of these on your chart is actually more for back testing to see, how far back does it normally go? Does it hold? And so on. Do the pivots actually work? But once you've kind of done that back testing, personally, I like to then just remove them and just keep whatever, just the current one, today's one. Okay, so we are on to the final topic now, which is the Fibonacci. And Fibonacci is actually one of the tools that I use a lot in my trading. So I find this, both for entering the market to be very useful and also for exiting the market. So we use retracements, for example, for entering the market to trade with the trend, and we use extensions to make targets essentially. So these are some of the most popular Fibonacci numbers. We have the 23.6, the 38.2, the 50, the 618, and the 786. And this one here is the most important and common one, and then the others are important, but this one here is known as the golden ratio, and this is the one that we certainly pay a lot of attention to because this is where a lot of traders are interested. So let me just I'm going to assume something. I'm going to assume that maybe this is new to you, so I'm just going to give you a very brief understanding of what this actually tells us. So this is a numerical sequence. Okay, it was calculated many years ago, and for different reasons, which I'm not going to get into today, these numbers have some kind of special power. And in fact, that you can actually find a lot of these numerical ratios in a lot of, in nature, for example. You can find them in, a lot of famous buildings like the Parthenon and so on that were built within these ratios. So there's something interesting about it. But more importantly, it works in financial markets. Now, why it works, maybe it's a self-fulfilling prophecy, maybe it's something else, but what I find is that it's a very, very effective tool. So essentially, the way that we use it in financial markets, and these ratios in particular, is when you look at something, let's say you are looking at a downtrend, and you have basically a high point, we'll name this A, and then we have a low point, we'll name this B, and the market, let's say, has just gone down. And let's say you are looking to trade with the trend, so you want to essentially sell in this situation. Well, one of the things that you can do is you can plot these ratios. And so let's start with the most simple one to understand, which is the 50%. So as the market, let's change the color actually, let's make it blue. As the market starts to go back up like this, okay, you're looking for maybe a way to enter the market. But where do we enter? Well, the halfway point is the 50%. Now, what's interesting as well, I don't know if it's interesting, but it's a fact, is this actually is not a Fibonacci number, but it's very, very commonly used, and that's why we include it, and it's part of what I include as well. But actually, it's not a Fibonacci number. It is just a halfway point. So this is like halfway up is 50% of the move. If you want a slightly better price, the 61.8 will be sitting just above. So it's basically retraced or gone back up 61.8% to be specific of this down move. And that is a very popular area that other traders will also be looking at to sell. Okay, now if you imagine it's gone there, and then you look at some of your other signals, like the things that we've spoken about, maybe the RSI, the MACD, pivot points, and so on, and they're all also giving you potential sell signals. Maybe there's even some divergence. Well, you're now much more confident that this might be a good area to sell. So again, just like we've said with everything, it's very important that you get confirmation and that you have multiple things that are saying the same thing, okay? Because that's improving the probability of something working. So here, this becomes a potential area. And then of course, you have all of these other ratios. So the 38.2 will be lower, will be somewhere there. The 23.6 will be there. And the 78.6 will be a bit higher, okay? And that's basically how it works. Now, let's have a look at an example. And you can see it in on a chart here. So let me just remove these, and let's move on to the next slide. So here we are. You can see that this market has basically we've drawn, in this case, we've drawn a Fibonacci from the low point down here. So this would be the, let me change it to black, sorry, so we can see it. So this here would be the equivalent of your A, because you're looking up, okay, you're looking to buy something potentially. And this here would be your B, because this is the high point, okay. And then these are the Fibonacci areas. So this is the 23.6, 38.2, the 50. And if you have a look where the market went to. It went to this 61.8. So if you're going to use Fibonacci and you're only going to use one ratio, this is the one that I would choose. Like I said, it's known as the golden ratio, and actually it's the one that is most popularly used. Okay, so that's the one that offers that kind of balance between value buying and also popularity, let's say. Okay, everybody, so we've actually covered everything that I wanted to cover. Is there anyone that has any questions? Because if you don't have any questions, what I like to do is I like to just bring up the charts. I want to just show you where to find all of these indicators, how to add them in, and if there's any charts that you guys are looking at, please feel free to mention them, and I'll be more than happy to choose a particular chart. Manel, are you mentioning, is that gold? Is that what you're asking for? GBP USD. Okay, gotcha. No problem. Cable. Yeah, we had some CPI come out, in fact, this a few hours ago. So we can definitely have a look. Let me bring in our charts, and I'm just going to just quickly bring in cable right here, and this is the daily chart, this is the 4 hour, and this is the 1 hour. Okay, if you're using 3 These are the ones that I like to use. Now, the thing I like with TradingView is, when you have a lot of indicators like here, it's very difficult to actually analyze a chart. So what I like to do is, if you double click on the chart, you can just get rid of the indicators and then double click and they come back. So the CPI number that came out about 2-3 hours ago was in fact 6.7%. Okay, the forecast was 6.6% and the previous was 6.7%. So it's come in slightly better than forecast. Now, if we just make this chart a little bit bigger, and I'm going to double click here. This is the 1 hour chart, and you can see that the market has reacted bullishly to that. So you can see that since it came out, it has rallied. In fact, let me just go back to the, because I didn't, let me see what actually happened. So it came out, it would have been here. Okay, so you can see a big bar, it retraced, and now it's actually seems to be going back up again. So the news is kind of mixed, but which is why the market is reacting the way it is. Now, let's have a little look at a couple of things here. So here we have, this is the MACD. So let's start with the daily picture, okay, and we'll just discuss what these indicators are basically saying to us right now. So on the daily chart, you can see, in fact, let me just do this and zoom out like this. Okay, so this is what's been happening on the daily chart. So overall, we have basically been, we've been going down for the last couple of years, and then we've had this big rally, and then the market has now started to, it's had a drop there, and now it's starting to retrace. So one of the first things that we can do is we can take our Fibonacci tool and say, well, okay, if this market was to actually go up, where is the 61.8, for example? So this is where the Fibonacci tool is, and then if we draw it going down like this, I'm just going to show you exactly what these are. I don't have the numbers in because I just like to keep it clean. So if you double click on this, you can see these are the numbers. This is how I've got it set up. And here it's basically, you can select to show the levels. Okay, so if I put levels in, it will show them. So you can see there's the 23.6, the 38.2, the 50, the 6.18. Okay, I will put them in for you guys just so that you understand. And if you have a look, I've got this quite a nice reactive line drawn in here, and look where I've basically highlighted. This is where the 61.8 comes in. So this area here is quite a nice area, and it's backed up by, this is a really nice resistance point. We've got this diagonal line, and it's all very close to this 61.8, which comes in about 127.43. So on the higher time frame, that looks interesting. Okay, if we were to get up there. Let's now look at the MACD. So what is the MACD telling us? Well, what's interesting is that on the one side, we've actually had a sell signal because we went below the zero line, and the market has dropped since then. And then on the flip side, you can see that the MACD line has gone above the signal line there, which means that right now it's in a mini uptrend, which actually is quite good, because that might actually help us get back up to this area here, and maybe the sellers will then start to come back in again. Okay, and maybe target somewhere down here again. Let's have a little look at the other indicators. Is the RSI overbought? Well, not at the moment. In fact, it was, since we started to go up, it was oversold here, and you can see that this market at this point has now started to go up. Okay, so this could be heading towards overbought, and if you imagine if this gets to overbought then and it enters here into our zone here, this will be further confirmation about this Fibonacci 61.8. So there's potentially, you know, maybe a few hundred pips before we get the sellers really stepping back in over the longer term. Okay, so remember we're talking about daily charts here, not today's charts. And this is the stochastic. Again, this is not one that I would use because the market, it has been trending rather than ranging, so you know I wouldn't necessarily use the stochastic right now, and you'll probably get a lot of false signals. But if we look at the RSI and we actually hover over here, you can see that when the RSI was overbought, the market actually, that's where it topped. In terms of divergence and convergence, well, this market did not have any divergence. So you can see that the price basically went higher and this also went higher. So there was no hidden clues that this market was going to drop, okay? And again, the RSI, the market went higher. So all of this was aligned. So actually this here was a bullish signal, okay? It was a bullish signal. So this, you wouldn't have had the heads up that this market was going to fall. In this example here, you can see the market was going higher, but actually we did have some divergence on these indicators, and the market did fall briefly for a little bit, and then it continued to go up. Okay. So with this in mind, bearing in mind that we're now thinking, is this going to potentially head up towards here? We can go to the lower time frames and have a look to see, you know, what they're saying. So let's see what, for example, is the 4-hour time frame saying. Let me collapse this pane so we don't have too many things on there. So at the moment on this chart, at the moment, you would definitely say that this is going sideways, and you know, aside from price action that I can see, it's not really moving anywhere right now. You can also see it with the moving averages. So when the moving averages go flat like this, that tends to mean that the market is not going to, it's going sideways. So this is where the stochastic could come into play. Okay. Again, I would use this as just as a confirmation, not as a leading indicator, and say, okay, well, if the market, you know, let's say we want to buy this market, if the market was to drop a bit lower, maybe we'll find some support somewhere, you know, like this area here looks quite reactive, and this area here looks quite reactive. Well, in that sort of situation, if the market was to come lower, we might say, well, look, we might want to buy around here or here, and maybe we'll be looking for that confirmation where the stochastic is over here and the RSI maybe is over here, if that makes sense. Okay. Now, the other thing that you can do is you can also take your Fibonacci tool like this, and we can see where the Fibonacci's come in. So far we've actually pulled back, you know, between the 618 and the 786. So the next Fibonacci is actually here around 78.6, which is around 121. So that could be an interesting area to kind of look at, and you can see it's actually quite a nice reactive zone here. So you can see recently we've held very, very nicely in this zone. So again, that kind of, again, you've got some confluences there potentially in this area if you were looking to buy this, okay, you know, to head back up. And the other thing we can do is we can also go in and add in our pivot points. So here's the pivot points right here, and you can see just like the example that we showed you, all of these different pivots pop up. Now what I like to do is I like to double click, and I like to change this number here. So I believe I can leave it as 1. Yeah. So now I can only see today's pivots. The other thing I like to do is, let's double click this. I like to choose the daily as the time frame. Oh, let's change this to 2. That's better. So that's how I have my pivot points, and these now become support and resistance points. Now have a little look to see what's really cool on the chart. Now is that you can actually see that S2 pivot is right underneath this area of interest that we were looking at. So that basically adds another level of confidence that if the market was to come lower, this now is an additional thing. So see how you're building the picture up there to essentially find opportunities. Okay, and then just an additional thing here, if you were looking to sell this, for example, because at the moment, even though we've found some reasons why the market might go up, you can also see that, you know, we are basically trending down. In fact, you can see that this market has been holding as resistance really nicely on this 200 moving average. So you might be thinking, well, you know, what about selling it? Maybe if we got close to this. Well, the other thing you can do is, if we just remove this Fibonacci here, is we can take the Fibonacci and we can draw it from high to low and identify, you know, where are those deeper Fibonacci's. So here is our 61.8 right there, you know, and then here is our 78.6 right there. Okay, and you can see that both of these, you know, might be quite close to this 200. So if this market takes its time, the 200 will carry on coming down, and then eventually that could become a potential sell zone. And remember, the market is actually going sideways right now, so selling highs and buying lows can also make sense whilst the market is making a decision on which direction it's going to go. So, you know, then you could be looking to, you know, take it down here and then maybe even take the other side and so on until this range stops. Any questions? And does that make sense? We also have the hourly time frame here as well. We may have time to have another look at one quick one if anybody's got any other requests. I will have a look at something. Let me take a little look at the Aussie. Let's see what's happening with the Aussie dollar as well. Okay. So this is the daily chart of the Aussie. Again, always start with just look at price, see what's going on, understand the context. So we've got a little bit of channel support there, which we can use to do something like that. Looks like it's just kind of channeling at the moment. It's possibly going to go to the top of this channel. Not necessarily, but it could. It didn't quite get to the bottom here, so maybe it still has some room to go down first. Let's have a little look at the signals. What are the different indicators showing? Well, this is kind of sideways. We are below the zero, which is bearish, and the signals are kind of false at the moment, so not great on the MACD. The RSI is kind of it's in the middle of nowhere. it did go over. What's it actually? One interesting thing, I don't know if you've spotted it, is you can see that the RSI was oversold here, but the market has not actually gone up yet. Okay, so the market is going down, the RSI is going up. Who remembers what that is called? And then the MACD is doing the same thing. So what is that called, guys? So the market is going down, the indicator is going up. That is essentially what we call divergence. So there is some hidden strength. There's some hidden strength in this where, you know, this market may be getting prepared for a bigger move higher. Okay, the indicator is basically showing us, and both indicators are showing us that this market has some hidden strength and that maybe it's going to start going up. If we look at the 4 hour right now, again, you know, it's just ranging, okay, channeling down, ranging. So this is an interesting point. Look at the pivot point right there, R3, around, you know, quite a nice number, nice reactive level in fact there. If you just take a box there and you just put it across, you can see that it's quite a nice reactive zone, and it falls in line with this 200 moving average, the pivot point. Let's have a little look at the RSI is not overbought yet. So, you know, if we can get the RSI above 70 as well, that will be a better signal. And then the MACD is again quite rangy. I mentioned before that, you know, we use this for divergence and convergence. One other thing that you can do is, I do like to see where does the MACD actually find resistance, because remember, it doesn't have an upper boundary or a lower boundary, and you can see right now that this is actually very reactive in these areas here. So this area and this area and this area and this area. So again, it might be worth noting, you know, when the Aussie comes up here, that maybe that could be looked at as a potential signal where the market might go the other way. In fact, you can actually see these signals have been really, really good. You know, here and here and here, really nice sell signals. So if we can enter back here, this might actually be a nice confirmation for the Aussie. So again, trade what you see, and in this example, the stochastic can be useful. So if you find the stochastic overbought, that can also be a signal, because it is a range market, and so, you know, the stochastic works really nicely with ranges. Okay. So in summary, guys, you know, the most important thing is, don't use things in isolation. Make sure that you use things that actually make sense together, so that you are building the probability up, and, you know, that way you are basically increasing the chances of your trade setup working. Okay, so there's no one thing that you're going to be able to do that's going to, you know, give you, you know, 100% signals. Okay, so nothing works 100%. So we're coming to the conclusion of today's presentation. I do encourage you to also join the final one, where we basically put everything together, you know, so how to kind of look at all of the things that have been covered in this series, how to do it across multiple time frames, and then, you know, most importantly, going into your trading platform, opening up your demo account if you don't already have one, and then practicing. So, you know, that's the best way to learn. You know, use a demo account, you know, get used to the platform and start placing your trades, and that way you'll start to practice and get confident with your strategy. So if you do have any feedback about today's presentation or anything at all, this is where you can get in contact with Vantage Markets. These are the various handles, okay, depending on what social platform you're on. And there is an email there as well. So if you're enjoying this, for example, if you're getting value, then please feel free to let them know. And you know, and please ask questions, any feedback, anything that you want help with, anything you need support with. You know, the team is there and available to you, and you know, take advantage of that. So anybody else got any final questions at all? As I said at the beginning, my name is Andy Demi, and been a privilege to be with you guys, to hopefully have shown you how to use indicators effectively, correctly, which is the most important thing in order to improve your trading. I'm going to give you guys 10-20 more seconds, and then I'm going to shut the live stream down. But thank you everybody for being here, for your participation, much appreciated. And like I said, I hope you got value for your time.